Welcome to Digital Information Mal-C channel. In this video I am going to teach you how to make your own trading plan on binary option on uptrending market. Now on the chart, you will notice blue lines and it is called lines or support and resistance. These blue lines will give you the way how you can make your trading plan easily. There are two ways how to make your trading plan based on the current chart situation. First is, you can make your trade position in between the support and resistance, or else you can enter your trade every time the candlesticks hits the support and resistance level. Which means, when the candlestick hits the upper line, it is an opportunity for a sell or down trade position. And when it hits the lower line, it is an opportunity for buy or up trade position. The second way to enter your trade position is during breakouts. Every time there is a breakout on the support and resistance, is a great opportunity for a trade position, and this has 80% to 90% winning rate. Breakouts indicates for the momentum of trend, the reason that this has a higher percentage of winning trade positions.
If your trading platform has no indicators such as trend lines and vertical lines, it is better for you to use another application for your technical analysis or your trading plan.
This is also what I did. If you want the application that I am using for my trading plan, you can find the link on the description below this video. Trend lines and horizontal lines are very useful on making a trading plan. This will help a trader to analyze the current market situation, and the trader can easily make a trading plan. If you will notice on the chart, every time the candlestick hits the upper line, it moves back, and every time it hits the lower line, it bounces up, meaning your opportunity to enter a trade position is during the time when a candlestick hits the lines. But still you can enter a trade position on the second candlestick that hits the lines, or even until the candlestick is nearly hit the opposite line. Now let's move on to the breakout situation. Breakouts mostly appears with a consecutive solid candlesticks. This happens because of its trend momentum, or the opposite traders is weaker than the other. When the opposite trader is weaker, the momentum of the trend is higher compared to the weaker side, the reason that the percentage of winning trades on the breakouts is also higher. You will notice on the chart that there are consecutive solid bearish candlesticks appears. But after the breakout, the second candlesticks appear with a wick line, which is an indication of having a reversal candlestick. Then it was followed by a small bearish candlestick that creates a higher high and higher low situation, which is a confirmation of trend reversal. Then a bullish candlestick appear and followed by a bearish candlestick. Even though there was a bearish candlestick, you will notice that the bearish candlestick creates a higher high and higher, which means it is still an uptrend. Then suddenly a long bullish candlestick appear.
Here is another scene on the chart. If you will notice, after the breakout a pullback or a retracement has happened that hit the lower line on the chart.
Now what is amazing is that the price respect the lower trend line. Seems like there was a certain force that pulled down the price back to its previous low price.
Here you will notice if how important are the trend line. You can easily determine what will be the next market price movement. Now the lower trend line becomes an entry point for a sell position or down position, but at the same time it becomes an entry point for a buy or up position, if in case an uptrend breakout will happen. Now, what you will do if in case this occurs on your trading? The first thing you need to do is to create another trading plan. Remove the upper trend line, then draw another trend line below on the previous low price after the breakout. Now, based on the current price situation after the pullback that hit the lower trend line, the price respect the previous low price and the bearish trend stops at the same level of the previous low price. Then it slightly goes up. Try the price to push it up, but the force of the sellers still exists, that resulting in pulling down the price again. And now the current market situation, below the lower trend line, becomes a ranging market or a sideways trend in which both buyers and sellers is not in control. But based on my own technical analysis, Since there was a downtrend breakout happened, the trend will continue on a downtrend market situation.
If we will wait for few minutes, we can surely see a breakout on the previous low price. Hence the force of the sellers is still existing on the current market situation. It might not be an instant breakout, it might be gradual breakout, but surely the previous low price will be break and the market will continue to a downtrend market situation. By the way, if you think that this video helps you a lot, kindly like and share, then subscribe on my channel. Don't forget to hit the notification bell, because this is just the first trading plan tutorial for binary options. We have more trading plan tutorials to be uploaded, based on the different market structures. Thank you for watching. See you soon on the next binary trading plan tutorial.